Well, welcome to our Beers in the Back call. Although, as you could probably see from some of the videos, we're not at the Mullet doing this one. Actually, I'm on the road, so there won't be any beers involved because that would be illegal. Going to go over the crop report today from the USDA. We got the Prospective Plantings report, got our stocks report. What did we get from the USDA today? You want to give us a quick summary?
Yeah. So today we got the stocks as of March 1, which gives us a quarterly inventory and gives us an idea of what the usage, feed usage or residual usage was that last 90 days and gives us a preview into what the ending stocks might be. And then we got the prospective plantings. So for most of the crops, except for winter wheat, we got our first estimate, our first look at what planting might be in 2025. And for basically across the board, we were pretty close to trade guesses. The corn and soybean stocks are kind of a wild card. We do what we can, but they came in right at the trade guesses. So, and
Not much error, huh?
not much error there. And the wheat was a little bit on the high side, which, could portend a lower feed use number for the year, but I doubt they're going to change it. We get our first supply. Well, the USDA will adjust their balance tables in April based on these numbers. And then in May, we get our first 25-26 balance tables, and they will use the acreage, more than likely, very highly likely, use the acreage that was given to us today in the prospective plantings there. So the talk of the trade and the word has been that returns to corn are much better and going to get us more corn acreage and a reduction in soybean acreage. And that's exactly what this report told us. 95.3 million corn acres, one of the largest we've had on record, largest since 2013 at least. Soybeans, it's toward 83.5, off 4%, a pretty big drop relative to where we've been the past 10 years. So the market's trying to adjust for poor returns for soybeans by farmers doing maybe going out of rotation to some degree. Maybe to some degree it was flipped the wrong way last year and they went back the way they are. So we got 95.3. That corn acres, that gives me, in my estimation, a crop of around 15.8 billion bushels, up 6%, and ending stocks for 25-26, and then be looking out about 18 months of over a 14% stocks use ratio. So I'd have to say it's similar to what we saw last year in terms of coming out of this report with expectations that we'll have enough supply if trend yields are realized to push the corn market down toward the $4 mark. Soybeans on the other side, if you get a nice trend yield of 53 bushels per acre, you're going to have a crop about the same as the last year. A little bit tighter stocks. So much is going to depend on what the demand picture does in the next couple months and see where we get on that, and if we get any pushback from tariffs that slows down demand, or how the South American crops will finish up. But overall, corn was expected to be the one that was going to build more stocks this year, and the farmers made that happen by switching to a pretty big increase in corn acres and a decrease in soybean acres. The wheat, probably a little bit bullish on the wheat, and if anything, I'd say that might be what's the market's responding to, that we got. I couldn't find in 30 years a spring wheat number that low, so we're not down that much from last year. We're down 500,600,000 from last year, but it's, we continue to see the trend in the western states, especially in the northern plains, away from wheat and towards corn and soybeans more so. It's, you get more corn acres also, probably because cotton acreage dropped by more than 1 million acres from a month ago. We also we got a number on January 12th for winter wheat acreage, 33, the new number is 33.5, and back in January, we said it was going to be 34.2. So we lost 900,000 acres in winter wheat that just never got planted when they resurveyed it. So a little bit of support for the wheat market from that. And if you just looked at the futures price, it would say they got the memo, and the wheat market is up about a dime right now.
Well, Scott, weren't you pointing out, I think on our key market drivers call last week, that we got a pretty good size short. The spec has a pretty good size short position in wheat in our markets, and a record short position over in Europe. If this is implication of that, or
yeah, I think that in the Euronext market over in Europe, they're at a record short, 35% of open interest. Now that hasn't been changed a lot. I mean, they ended up last week kind of flat. They are up a little bit today, but we haven't seen them, rushing to the exits at this point. I think it's kind of interesting, and I wonder what Bill might say to this. Do you think that the tariffs and the potential, we had already seen the StatsCan numbers or expected StatsCan numbers for Canadian acres up there, likely going to lose acres on canola and gain spring wheat acres up there, plus the fact that we're coming off of a fantastic record yield in spring wheat last year, that maybe farmers are backing off because of that. Not sure, but just wondered if Bill had anything to weigh in on that. The other thing that was surprising to me is that we did potentially lose those winter wheat acres from the January report. I don't know if there was an overstep by Uncle Sam or if farmers have put on their intentions, I'm just going to graze it and we're going to plow it under and put something else there, maybe this spring.
Could be. We lost 900,000 total. 500,000 was hard red winter, and 300, out of that 300,000 was Texas. So
yeah,
they just pulled back, or there may have been. We'll never know. I mean, they could have overstated it to start with in the first report, and maybe that brings up a real quick point that now that we got the March 31 report and we've traded the market for a little bit, we can fully engage on spring weather, and then also the June 30th acreage report, which will revise these, and wouldn't be uncommon to see, just by virtue of error more than anything, a million acre adjustment in either corn or soybeans in that report relative to what we got today.
I thought it was kind of interesting. You talk about the adjustment in acres, and Kent Woods sent an email out, and he talked about there was, west of Mississippi, he was kind of surprised how the losses in soybean acres, especially that in those areas, that's where we have seen a lot of this growth in crush capacity. And he noted too that we may see a revision when we get to June, but it's just, is it just with farmers switching out of wheat, and you said, Bill, looking at more corn and beans, and then with these bean acres being down, is this, when we've seen these big swings before in the Prospective Plantings report, how often do we get a big adjustment in June? I mean, or do you think we're going to hold at this?
I don't think it matters how much we adjust these, as much as if there's probably an early spring, which allows farmers to get in more quickly, or conversely, weather problems that push them the other way. But it wouldn't be uncommon to see a million acre adjustment, one or the other or both, for corn and soybeans.
Or the other one too would be prevent plant, right? If it's a unfavorable spring.
If it's too wet, yes.
Yep.
The other thing
Yeah,
I
think,
noticed,
though, you kind of, I'm sorry, go ahead, Nate.
oh, I was going to say, I don't know if it was Scott Irwin or somebody had posted on X that whenever you see these big corn acre numbers like this, that historically we've struggled to make trend line yield. Is that simply because we're planting corn in areas, Bill, that aren't traditionally big corn production areas, and so then we don't see those big yields? Is that the reason for that?
Theoretically, I mean, mathematically, it shouldn't make a half a bushel per acre difference.
From a national standpoint.
That's a mathematical fable. How's that?
There you go.
Wise man once told me that we can argue about what the yield ought to be at this time of the year, but Mother Nature is going to decide that this July.
Right.
Bill, we were talking about acreage adjustments a minute ago. I think Nate brought it up. I think you've also taught us over the years that small adjustments, million acre type adjustments and less are common. The years that we have big moves, big migration in acres after this planting intentions report that we get at the end of the March are typically in favor of soybean acres, sometimes in years where you just can't get the corn planted because it's too wet.
That would be common. That would be typical, but there's, yeah, that's one thing. If they've already got fertilizer on, they're probably going to go longer than they would otherwise, trying to get the original crops they intended, usually corn, into the ground there. That would keep them there. So, you know, the common thought is that you don't get your corn in by a certain date, say June 1, you're going to start thinking pretty hard about going into soybeans. But the returns for soybeans are not very good, I guess is the way I would put it. To be kind. I mean, switching out of corn and back into soybeans would kind of surprise me.
Yeah, that's a good point. I think those Iowa State numbers you sent out, the returns for soybeans, as I recall, had brackets around them. Not
Yes,
good.
they did. That's not
Not a
good.
whole lot of incentive to hustle to get your soybeans planted, is there? Well, we kind of had, I think the price reaction today was, I'm not going to say surprising, I suppose, even though we got a little bit bigger corn number than expected, smaller wheat number than expected, a little bit smaller bean number than expected. Didn't have a lot of price movement. And I wonder if the message or the lesson from today's report is just very simply that these numbers are kind of close enough for government work. History tells us that we might get some modest adjustments along the way due to weather or whatever else. And that all eyes, once again, now that we got this report in the rear view mirror, all eyes kind of go back to the weather forecast. And of course, Wednesday's a big day. It's tariff day, as everybody's taken to calling it, or Independence Day, depending on whose term you want to do. So that probably becomes, those two things probably become the most important things to watch here going forward. So any other final comments here before we wrap up the call today? Any other thoughts? Anything else we gleaned from the numbers?
What was Nate,
ahead.
what was the real quick, we were gonna, some of these smaller crops, sunflowers being one of them.
Just going to mention
Oh, yeah.
that
Yeah.
It was up. What was it, like 45%? Did you mention, Bill? Sunflower acres.
Yes, huge increases in sunflower. Still below 2 years ago, but back up sharply from where they were.
So, but for anybody who is in the sunflower oil market, right now, if you're trying to buy old crop sunflower oil, it's almost non-existent. So that's probably welcome news there.
Flaxseed was up, canola down.
How much was canola down?
Almost 10%.
Okay. And that's kind of in line with what we've heard anecdotally from some of the grain folks in the Dakotas. They said that sunflower acres, they expected to be up 30%, and they thought canola acres would be down. Part of that's obviously because canola seed in the US is priced in Canadian dollars off the Canadian exchange. And with what's going on north of the border, if you're a US farmer looking at those prices, it doesn't look real great right now. So.
Yeah, I think the canola acres you said down 10%, but that was off of, I believe, a record large acreage base last year. And the sunseed acres, and Bill was helping me listen to the NAS press conference right after the report came out, and it was, I think, sun acres up 49%, but that is up 49% from last year's record low acreage base to sunseed. So looks like more than just a correction. Did I hear you say, Bill, that it's still only just not quite back to where we were 2 years ago?
It's way down. It's down 25% from 2 years ago.
Wow. That shows
So
you just how big a acreage drop we had last year.
right. Yeah, a lot of switching going on there. Barley acreage about flat. Oats down a little bit. Milo actually had an increase, so maybe some of that dry land area in the southern plains increased that. The loss of cotton acreage is a big deal too, because that's I think roughly a 10% drop in those acres. So there's been a lot of switching around going on here. And I just looked, and it's when you have a big number in the March report for corn, it doesn't necessarily mean you're going to get more or less in the final report. We've done both. So
yeah. Well, I think that's a good point. The NAS comment, when I first heard the corn and bean numbers from you, I thought, wow, that's a big number. Well, it's a little bit larger than expected for corn and beans, just the pool of acres of those two crops. But if you look at the total pool of acres of the 22 crops that the USDA is reporting on here, it's actually down almost 0.5% in total. So we really don't have an acreage, a total acreage issue to come out of this report. It's just maybe they migrated around a little bit differently than many in the trade were expecting. So, all right, any final thoughts here before we wrap it up?
no,
All right.
No.
I guess hearing none, thanks everybody for participation. Peyton, hope everybody listening enjoys this. And as always, be careful out there.